Hey guys, welcome to my first video of 2025. Hospital sector has done phenomenally well over the last year. In 2024, the sector has delivered on an average 70% returns, and I'm taking this number from Tijori Finance. And some of the hospital stocks like Dr. Agarwal's Eye Hospital and Indraprastha Medical have delivered multi-bagger returns in just last 12 months. So the sector has been doing pretty well. But in this video, we are going to discuss a small cap hospital player, which in my opinion is available at a reasonable valuation as compared to the hospital sector in general. I'm talking about GPT Healthcare Limited. GPT Healthcare Limited made its debut on the stock exchanges in February 24 with the approximate issue size of 525 crores, out of which only 40 crores was the fresh monies raised by the company and the rest being the offer for sale. In this video, we are going to deep dive into GPT Healthcare's business model. We will discuss the background, business model, its P&L, balance sheet, growth levers, and the valuation as well. So we'll try and understand why this company is available at a reasonable valuation as compared to the sector in general. So stick with me till the end as we uncover the fundamentals of this company in this video. So before we discuss the business model, let's understand a brief background of GPT Healthcare. So GPT Healthcare is promoted by Kolkata-based GPT Group, and this GPT Group is managed by three brothers of Tantia family: Dr. Om Tantia, Dwarika Prasad Tantia, and Sri Gopal Tantia. This GPT Group has different businesses. So they have this hospital business, they have infrastructure business, they have castings business as well. And their infrastructure business, GPT Infra Projects Limited, is a listed entity since 2011. Talking about GPT Healthcare was founded by one of the brothers, Dr. Om Tantia, who is a renowned laparoscopic surgeon himself. So this business was actually started as a small laparoscopic surgery clinic way back in 2000 in Salt Lake area of Kolkata. This small clinic then turned into a 85-bed multi-speciality hospital. And after Salt Lake, the company established hospitals in Agartala city of Tripura in 2008, in Damdam area of Kolkata in 2013, and Howrah city of West Bengal in 2019. Talking about infrastructure, the company has a bed capacity of 561 across all its four hospitals. The company employs about 2,000 associates, including 90 doctors on their payroll. The company also has 560 plus visiting consultants across its four hospitals. So that was a quick overview of the company. Now let's look at the business model in detail. Look, we already know that GPT Healthcare Limited operates four hospitals. It's a hospital chain with the bed capacity of 561, etc. But there are a few aspects of GPT Healthcare's business model that differentiates itself from the competitor's business model. So we'll look at these aspects one by one. Okay. Number one is location. Look at these hospitals. Three of them are located in West Bengal, and one of them is located in Tripura. Right. So GPT Healthcare is clearly an Eastern India focused hospital chain. So the company has been operating in this market for over 20 years, and the management understands the nuances of the region, like the patient culture, preferences, mindset of medical professionals, etc. So that's number one. Number two is the micro market strategy. Now look, GPT Healthcare's hospitals are located in the densely populated areas of the cities, like the heart of the cities. And there is no major corporate hospital within 4 to 5 kilometers radius where the GPT Healthcare's hospitals are located. So GPT Healthcare's hospitals cater to that 5 to 7 kilometers of catchment area with no major competition around. So that's number two. Number three is the size of hospitals. So if you look at the size of GPT Healthcare's hospitals, they're about within 100 to 200 beds. Now GPT Healthcare actually has a strategy to build mid-size hospitals as opposed to large format hospitals with 400 to 500 beds. So this helps with the OPEX and the CAPEX, but we'll cover that later in the detail. Fourth is the attractive price points. Of course, GPT's price points are lower than that of bigger healthcare chains like Apollo, Medanta, Max, etc. And GPT Healthcare's hospitals also cover major medical specialties. So they cover about 35 specialties and subspecialties. Out of these specialties, top 5 specialties, including nephrology, cardiology, gastroenterology, gynecology, general surgery, contribute about 50% to GPT Healthcare's revenue. Right. Last one is the payer mix. So GPT Healthcare Limited receives payments from the patients either through cash out of pocket or either through private insurance players or the third party administrators. So the company is not dependent on any corporate or government healthcare schemes. So that helps with the operating cash flows. So the operating cash flows are better in absence of any major receivables from corporates or government, right? So these are the aspects that differentiate GPT Healthcare from its competitors. Now let's look at the hospitals also, GPT's hospitals also one by one. Number one is Salt Lake. So this Salt Lake has the lowest bed capacity, but if you notice, it has the second highest average revenue per operating bed per day. So basically, the patient realization is higher because see, look, this hospital is a mature hospital. It has been around for more than 20 years, and it's a center of excellence for bariatric surgery. So when a hospital offers advanced treatments, the patient relations are generally higher. So Salt Lake is one of them. Agartala is the largest hospital for GPT Healthcare. So with 205 beds, it's the largest hospital, and it's the largest hospital in terms of patient volumes as well, right? And one thing to note about Agartala Hospital is that it also attracts patients from neighboring countries like Bangladesh and Nepal. So in terms of patient volume, it also benefits from medical tourism as well. Third one is Dum Dum. Now look, Dum Dum is the best performing hospital in terms of patient relations as well as patient volumes as well. So that's because it's one of the few hospitals which is licensed to perform renal transplants, kidney transplants on the patients, right? Also, this hospital is situated nearby Kolkata Airport. So that also gives this hospital a locational advantage. Last one is Howrah, and which is not, so this Howrah hospital is newly built in 2019. So it's not as mature as other hospitals. So the patient relations as well as patient volumes are amongst the lowest in these four hospitals. So, but this hospital also enjoys locational advantage because it's situated nearby Howrah railway station, which is one of the major railway stations in Eastern India. So that was a quick overview of hospital as well and the business model of GPT Healthcare Limited. So we looked at the broad strategic aspects of GPT Healthcare's business model, right? So let's now look at how these aspects have turned into a good financial performance as well, right? So let's start with the operating metrics. So as you can see, that number of beds have largely remained the same, but the occupancy rate has gone up from 48% in FY21 to 59% in FY24, right? So this occupancy has improved because of the patient volume growth. Okay, so this, as you can see, there are two types of patient: inpatients and outpatients. So inpatient means the patients which are admitted in the hospital, and outpatient means the patients which are visiting the hospital for consultation, not the surgery or anything. Okay, so that's the difference. So as you can see, the inpatient volume has grown at a CAGR of about 20%, and outpatient volume has grown at a CAGR of about 36% during FY21 to FY24. Another thing that I want to highlight is the reduction in average length of stay, or the ALOS. Now this ALOS means how long the patient is staying in the hospital, how long the patient is admitted in the hospital. So in the hospital industry, lower ALOS indicates higher efficiency, right? So in GPT's case, it has gone down, and despite that, the occupancy has increased because of the healthy patient volume growth that the company has experienced. Another metric is average revenue per occupied bed, or the ARPOB. So that's the per patient realization per day, right? So that has also grown at a CAGR of about 10% during FY21 to FY24. Okay, so this growth in realization, growth in volume, and reduction in ALOS, the combination of these three factors have resulted in a healthy revenue growth of 18%, 18% CAGR between FY21 and FY24. So this is a decent performance considering that the bed capacity have remained the same, right? So that's the operating metrics. So before we get to the P&L of GPT Healthcare, let's first understand the basic cost structure of the company. Okay, so there are three major expenses in GPT Healthcare's P&L. One is medicines and consumables, second is employee cost, and third one is the doctor's payout. So this medicines and consumables is the only expense which is entirely variable. So this medicines and variables consist of medicines consumed for this inpatients, the surgical materials and the medicines consumed for the patients which are admitted to the hospital. So this expense entirely depends on the patient volume, right? So that's the variable expense that the company has. And employee benefits and other expenses are largely fixed, because patients or no patients, the company has to pay its doctors the salaries, the other nursing staff and other staff, right? And the company has to maintain the hospital as well. So these are the fixed expenses that the company has. Third one is doctors payout, which is partly fixed and partly variable, because the company has both the models, fixed and variable models, to attract doctors. Okay, so the company rewards the doctors for revenue generation as well. So part of it is variable as well. So it's a mix of both. So because of the higher fixed cost in the P&L, the company has inherent operating leverage, right? So keep that in mind while we evaluating the P&L as well. All right. So let's look at the P&L. So revenue growth, as I mentioned, the company has got 18% CAGR between FY21 and FY24. So company has nearly doubled its revenue from 200 crores in FY20 to 400 crores in FY24, right? So that's because of the growth in the operating parameters that we discussed earlier. Operating margins have also expanded. As you can see, like FY20 operating margins were 17%. From that, the company expanded the margins to 22% in FY24. So that's also because of the operating leverage that I mentioned, right? The bed capacity has remained the same, the fixed expenses are the same, but the volume is higher and the realization is higher, right? Coming down, look at the interest. Interest expense has also gone down from roughly 14 crores to 5 to 7 crores, right? So that's because the company gradually paid off the debt, and also with the IPO money as well. So the debt has gone down, interest expenses have also come down. So this, the effect of this operating margin expansion because of this operating leverage, and also the reduction in interest expenses because of this dual tailwinds that the company has got. This net profit has grown at a CAGR of 31% over FY21 to FY24. So the revenue has grown at a CAGR of 18% and net profit has grown at a CAGR of 31% because of these dual factors that we discussed. So in a nutshell, a good operating performance has translated into a good financial performance as well for GPT Healthcare. Before we discuss the balance sheet and the cash flows, let's zoom in on one of the aspects that we discussed earlier. Remember that I told that GPT Healthcare prefers to establish the mid-size hospitals that help them lower the capex. So let's see how this approach benefits GPT Healthcare's balance sheet, right? So in the hospital industry, one of the key parameters to track is the capex per bed, which denotes the capital intensity per bed. Needless to say that lower the capex per bed, higher the returns on capital, right? So in DRHP, the company has given the breakup of gross block per hospital, and the gross block per bed, right? So as you can see, it's roughly 30 lakhs for the Salt Lake Hospital and 70 lakhs for the Howrah Hospital, which is understandable because it's newly built in 2019. So on an average, the company has a capex per bed of 54 lakhs. Now focus on this data from the DRHP. GPT's capex per bed is 54 lakhs GPT's capex per bed is 54 lakhs against an industry average of 1 crore for tier 1 cities, 50 to 80 lakhs for tier 2 cities, and 25 to 50 lakhs for tier 3 cities. And this industry average data is excluding the land cost, and GPT's capex per bed is including the land cost. So you can see there's a massive difference, and that's the benefit of establishing mid-size hospitals. Now look at the balance sheet. Borrowings have gone down because of the gradual repayment and the IPO money. Fixed assets have largely remained the same. So 220 crores of fixed assets because the bed capacity has remained the same. Talking about working capital, inventory and receivables are actually lesser than trade payables. So the company has a negative operating cycle. So as you can see, cash conversion cycle is negative, and due to overall efficient capital allocation, in the part of capex and also the working capital, ROCE has expanded from 14% to 30%, which is extremely healthy in my opinion. Because of this negative operating cycle, operating cash generation has also been robust. So against 88 crores of EBITDA in FY24, company has generated about 69 crores of operating cash, which is pretty healthy cash conversion. During the last 4 years, FY21 to FY24, GPT Healthcare has actually generated a free cash flow of 200 crores. So this free cash flow provides the impetus for the growth strategy that we are going to discuss the next. Right. So the past performance has been great, but investing is rarely about the rear view mirror, right? It's about the future. So let's discuss the growth strategy of the company. But before we do that, let's also look at the half year performance for FY25. So as you can see, the company posted almost a flat growth for revenue and EBITDA as well. So the management attributed this muted performance to elections, general elections in India, extreme weather events in the state of West Bengal, and also the Bangladesh crisis. Right. So aside from this muted performance, the company does have growth levers in place. So in the short term, the company aims to ramp up the occupancy rates for Agartala and Howrah hospitals. So both of these hospitals are running at the occupancy levels of almost 50% or below 50%. So the immediate priority is to bump up the occupancy rates of these hospitals. Second is the expansion of tertiary service offerings. The company is also bringing up a radiation oncology block for cancer at Agartala Hospital, and the company is setting up infrastructure for robotic surgeries at the Salt Lake and Howrah hospitals as well. So this infrastructure will help grow the average revenue per operating bed, because as we discussed earlier, higher the offering, the better the patient realization, right? So these are the immediate growth levers in place, but the company also has plans for the long term. So GPT is coming up with two new hospitals in the cities of Raipur and Ranchi. So this expansion is also going to be on asset light basis, meaning that the company is not going to own the land and building, but actually the company is going to lease this infrastructure from the owners and developers of the land and building. Okay, so the company will only spend on the medical equipment, which will bring down the capital cost even further. So the company is spending about 55 crores for Ranchi Hospital and 50 crores for 55 crores for Raipur Hospital and 50 crores for Ranchi Hospital. So the capex per bed for this new hospital is going to be even lower than the current gross block per bed. Okay, so this Raipur Hospital will go live in the fourth quarter of FY25, and Ranchi Hospital will go live in FY27. So the company is also open to other modes of organic and inorganic expansion in the cities of Jamshedpur, Guwahati, Bhubaneswar, etc. So the company, so overall by FY27, the management has the plan to become a 1,000-bed hospital chain, and this is repeatedly highlighted by them in the earnings call as well. So that's the broad growth strategy of the company. The company is going to expand the bed capacity, almost going to double the bed capacity by FY27. That's the broad growth strategy of the company. Lastly, let's discuss the valuation part. To keep things simple, I'm just going to focus on the relative valuation for this video. So GPT Healthcare is trading at a discount to overall hospital sector. So if you see, hospital players are trading anywhere between 35 to 100 P, and compared to that, GPT Healthcare's trailing P stands at about 30x. Same story goes for EV/EBITDA multiple as well. Roughly, the company is trading at about 40 to 50% discount to the average industry valuation. And actually, this might be due to smaller size, and GPT Healthcare is recently listed, so it's not covered widely by the analyst community as well. So in my opinion, this valuation is not exactly cheap, but still reasonable as compared to the growth prospects offered by the company and the overall industry valuation. So if the company executes its growth plans well, this valuation gap is likely to reduce in the future. So that's about the valuation of the company. That's it for today. If you like the video, please share it with your colleagues and friends and subscribe to my channel. Thank you.